Okay, I'll just announce that we start. So pretty much when I post... So when I post recordings... Can you mute yourself? Okay. You know, when somebody does that, you never know. You never know if somebody is just trolling or he is like just hello music.
We'll go through a quick live rundown, shall we?
You'll share the screen, right?
I'll share the screen now. So Bitcoin on the daily chart, you can see we had the big breakdown, held this trend line for quite some time, going back 28th of December 2022. And we're trading inside now. So we had a break to the upside yesterday. Didn't quite test the 200 daily moving average. Didn't quite kiss that yesterday. And then the bears have sent the market back down again. So at the moment, we've got an inside bar. If this closes below the wick of the previous day's candle, then there's a chance that tomorrow's going to be a bearish day. So we're going into weekend trade and we've got the news tomorrow as well. And that's probably the reason why it's ranging. It's waiting for the news. And I'm not 100% sure what that news is. But like you said, Jellicoe, Jerome Powell's speaker, I know there's a big news event on tomorrow, which I need to have a look at. So that's Bitcoin just holding for the news tomorrow and the dominance. See, we had the breakdown on the dominance. This is the range that held for such a long time on Bitcoin. And although we had a breakdown in the dominance, which was bullish short-term for altcoins, they didn't bleed as much. We've kissed the support level here. So it's testing the support level here. And the chances are there's a high potential that that's going to continue to the upside now with Bitcoin dominance and Bitcoin rallying over the altcoins. So this is interesting with gold. It's interesting with gold. You see, we've been ranging. We've hit this 3 times now. We haven't quite managed the breakout on gold yet. We've had a double bottom here on the pullback, and we haven't quite managed to hit all-time highs, but still hovering up there on gold. The more times you hit the ceiling, the more chance it's going to bang through. And usually when you get 3 touches, it's a high probability that that's going to break through to the upside. So if we've seen a weak Dixie, and the Dixie, we had a break to the downside on the DXY, then you probably see gold rallying and test that tops again. So we've had a few. This is the daily chart still. So we've had quite a few days of upside on the DXY, which is the strength in the dollar. So as we have a strong dollar, we have weak crypto. So that's what you can interpret from that. And we're at a major resistance level actually now on the DXY, which you can see here. We had reactions quite a few times. If we zoom in there from this level here, and you can pull this back, you can see that this is quite a strong area of reaction. We've bounced off there, negative reaction there. One thing that is positive on the DXY, and I know that we don't want positivity on the DXY, is it's broke through its 200 daily moving average. So it's broke through a few times previously here. So if it's going to continue in this range for a while, chances are it's just going to continue breaking through up to the upside and to the downside of its 200 daily moving average. Quick look at the S&P 500 because Jerome Powell was speaking today, and let me get the 4-hour up. Let me have the 4-hour up. This was a news event. This is why you got to be careful for the news events, and this is why Bitcoin's gearing up for that news event tomorrow. And we're going to have a quick look at that when I pass it back over to Jellicoe. I'll have a look what the news event is, what time it is, and everyone can be cautious of that. But this was a news event here. Jerome Powell was speaking at Jackson Hole, and it was the jobs claims data. And this is what happened. We had a negative reaction from the stock market. So S&P 500 on the 4-hour, you can see it's bled there. And when you look at it on the daily, you can see we've reversed nearly the whole of yesterday's gains on the stock market there. So on the S&P 500. So let's have a look at a couple of altcoins. Actually, I've got a couple of altcoins up here. I haven't seen these yet, but this is quite bearish. We've had a negative reaction. We've got the 200-day moving average up the top here. And we've got this one here, which is the 50 daily moving average. And then we've got the 20 daily moving average at the bottom. So we've had a negative reaction from the 50 daily moving average here. And you can see we've also broke diagonal So we've held that trend for some time, broke down there. We haven't come back and retested this area, but this is the range that you'd expect a retest if you're going to short it. Haven't quite got there yet. And then you'd expect a move to the downside unless we do get some bullish sentiment in the news tomorrow. So quick look at Avax. This is the main break of trend. Once we get this main break of trend on Avax, you're well away, but this could play out over the course of weeks, potentially months. So we had a double bottom on Avax. We haven't had too much downside in comparison to Bitcoin over the last couple of days. However, if we do get negative news, you can expect more downside on Avax, currently trading at $10.08. So Avax on the daily, we could see that it put in a bear market low here previously on the 10th of June, come back, retested that bear market bottom, 17th of August, and now we're retesting that again. So we'll see if we get lows there on Avax. And I'll pass it back over to you now, Jellicoe, and I'll have a quick look at what that news event is tomorrow.
Okay, thanks. One of the things that is really bad, in my opinion, is if you look at S&P 500, I think now the correlation between the Bitcoin and S&P 500 will be higher, and if we get like a lower high, I think that would be also bearish for Bitcoin as well, and it's something that we don't want to happen. Regarding DXY, which you mentioned, I also think that it will range a little bit, because they can't allow US dollar to go down, and there is no reason, and no strength to go up either. So like if we get lower high, I think that wouldn't be good for the altcoins market, and especially like one of the things that I realized that people don't look into is like if you look some coins like Avax, for example, Avax and many layer ones. This is why I'm not very bullish on layer ones, is that they have high staking rates, and like staking rates, it's pretty much just free printing of new coins. And people don't realize that they're not getting like, if they stake $1,000 worth of Avax, that they're not getting API of, 8% on $1,000. They're getting like 8% on the Avax they staked, and people don't think often like about the devaluation of these coins, because there's more coins in circulation. Obviously, like the price will follow as well. And the worst thing regarding that is that the bigger players will always sell on smaller ones. I attended, I think I mentioned this to you last week regarding the SEI. I know that one private hedge fund bought SEI for like 0.025, so they're already 10x on it. So if they just sell part of it, they're already in huge profit, Like one thing that's also not very bullish is like if you look predicted funding rate, which I often mention, we can see that predicted funding rate is pretty much increasing, which usually was a bad signal for crypto and for Bitcoin, and this is like the predicted funding rate for the whole market. But it's really good if both of these are negative, like during this time. Often that's the moment when we have an increase in price. Like if we go, for example, and look into this area, we can see that here we are negative at Bitcoin, here we are negative at like overall market, and this is usually a bullish sign. But when you see that the price is decreasing, that the predicted funding rate is decreasing, it's usually not a good sign. Also, like I realized that, for example, technical roundup started addressing open interest and predicted funding rates. So obviously this is one of the indicators that is becoming like more interesting to people as well. I feel it's something that not many people look into. Open interest maybe yes, but predicted funding rate no. And yeah, today I mentioned to you, this is the only thing. I'll be pretty quick, then you can continue. Like the last thing, I met two guys today, and one of the things I also noticed that now many people are thinking, is Binance gonna fail? What is gonna happen? That there are many possible liquidations of BNB under 280 or something. And like, in my opinion, people shouldn't even, I think that this chart doesn't look good, it's 180. Yeah. So it's like pretty much, yeah, just below these levels, in my opinion, it's not something that you can short, because if you short BNB on Binance, obviously they can always mess you up with that. They can always like buy on spot, and they can like increase like the funding rates, and that you pay insane amounts of money for your short position, or they can just, it's one of the things that I haven't even thought before today's meeting. One of the things that they can always do is they can turn off the trading pair, and then you're forced to close position. Then if they realize that there are too many short positions and that they can't keep up, they can just pretty much close these positions and pretty much push the price up. So it's one of the interesting things,
Yeah.
And like, people are thinking if the exchange is gonna fail. In my opinion, like, I wouldn't hold like more than 5% of my portfolio on any centralized exchange, and like, its only purpose is to use it maybe for short buys and for futures trading, and even if you have more money than that, it should be spread across multiple exchanges, that like, if one of them fails, and during the bull market, it's not even a concern, because like, it's much less odds that anything will fail, because there is much more trading, they're earning more money. But during the bear market, I feel that Binance is not the only one that might fail, so yeah, that's it for me. So
yeah, it's quite it looks quite nasty, the Binance chart, doesn't it, at the moment? They have got some key stretcher levels of support. By the way, it wasn't the Jackson Hole speech yesterday. It's the Jackson Hole speech tomorrow. So that's where Powell's speaking. Yeah, so it's the Jackson Hole speech tomorrow. There was some news earlier, and that was a news event that crashed. Well, I didn't crash the S&P 500, but we've seen a downtick in the S&P 500 from that news. But the main news, Jackson Hole tomorrow.
Oh, okay. Yeah, I also know that something is happening, but I wasn't sure what exactly.
Yeah. So I think that's why it's coiling up, and it's just waiting. The rest of the markets are just boring when they're like that. It's just waiting for that decision, whether you're going to get some kind of positive or negative news. But the BNB chart, once you've dropped 180,
I'm not sure. Like, I know that somewhere you can look into the possible liquidations. I'm not sure exactly where, but I heard multiple people speaking about 180 zones. So
yeah, well, the 180 zones, the low of the range, since
it's the price where like Binance wouldn't be able to like fund collateral, which they borrowed. So
yeah, well, the chart tells a story. So let me just share this then. So that's interesting what you say, because the chart tells exactly the same story as that. So you got your 180 level. That's 184. Got your 180 level. So that's where they can't carry any kind of capacity. That's the low of this previous range here. If you're going to get a price movement move below this, it's going to be, in my opinion, a wick like that and straight back up within the day, in my opinion. Obviously, the charts do whatever they want, but you can see why this 180 is a key level, because before that, price action hasn't had a chance to build up. You've got a little bull flag here, little bull flag that lasted for a week on February 2021, just before the bull run. So you had that wick to the upside. This is a little bit of price structure that could potentially hold at 132. But you can see that this range here you've had none of this. You've had none of this, which creates structure, support, or resistance. You can see, come back down, this level's held. So you've had none of that built up here. So once you've dropped this level and you've closed below that level and the bears gain momentum at that level, and it's a dead man's drop.
Yeah, but one thing like with Binance, it's like one thing that you maybe forgot, it's like exchange coin. So pretty much, if people start withdrawing money from Binance and the price of Binance drops, they might not have enough liquidity pretty much to cover all of that, and that's the scary thing actually,
Yeah.
So it's always like one of the issue with like exchange coins is utility. Usually they use their own coins for launch pads and things like that, and like lower fees obviously.
Yeah.
But like another issue is like if you get a drop, like who would buy BNB at low prices? Like it's not like Solana, like where you can like it's layer one which has some use cases and which can recover. Like decrease in BNB could mean the collapse of. I don't think that there are high odds for that, but it could mean collapse of Binance. And then pretty much you want to take as much funds as possible during that time.
Yeah.
Honestly, I already moved all of my money from Binance, so I don't want. Once I end up in bad position, I don't want it to happen again.
Yeah.
And now, as soon now there's enough centralized exchanges. There's like tons of different hardware wallets. So I think in my opinion, I don't want to even think about it. I like to sleep well during night.
Yeah, don't blame you, mate. Don't blame you. Yeah. Shall I? I was going to say I was just having a quick look at the Bitcoin price because I was the first time I'd seen it earlier on in the video, but you can see that we've broke the 200 daily moving average as well. One thing that is, let me share my screen again. One thing that is interesting is sometimes I like to use moving averages on a macro. Moving averages are always a lagging indicator. So price actions key first and foremost, but you can see how these on a higher time frame, the daily or the weekly, get respected time and time again. And one thing that I like to look for is 200 at the bottom, 50 in the middle, 20 at the top. And what you can often do on that is wait for a pullback into the 20, bounce off the 50, and then you can get an entry on the close above the 20. So that works quite well on a higher time frame. But one thing that is quite worrying here is we've broken and we've closed below the moving average, the 200 daily moving average. So you can see that we did break and close below there for some time previously here before we got the move to the upside. But of course, we've got this key area here, which was the previous low, which means that if we break and close below that, then the trends are reversed. So basically, obviously, we need a continuation of higher highs and higher lows. We've barely got the higher high here. We've come back down and we've retested all the way there, which is probably around the 886 Fibonacci level. Let me just stick a Fibonacci on there. That's probably going to be a close below the 886. So if I just, we've come back and we've tested the 886. If you break and close below the 786, that's bearish. You know that there's a weak trend. And because we haven't continued this trend with a good high here, and in fact, I don't think we got a daily close. Yeah, we did. We barely got a daily close above here. And then we've come back down and we're nearly retesting the previous low. So you can see that the trend's weak at the moment. And you look at that and you want to have a look at the monthly. Yeah, so monthly. I mean, look at the time span here. This is always interesting. Look at the time span between previous here all the way before we officially got a new run. What's that? 34 bars, 34 months. So if you put that, even if you call the May top here, even if you call May the top, a lot of people call May the top. Wasn't officially, this was the top. So if that was the top 34 bars from there, you're looking at 1st of August 2024, which coincides with the actual cycle. If you call that a top, you're talking 1st of March 2024. That's about the same time as the Bitcoin halving. See if we can see any correlations between the actual halving and the chart. So estimated halving date, April 15th, 2024. So it's going to be, there's April. So this is when the halving is going to be. And historically, if you look at the last cycle, we've seen this relief rally here in 2019, which was a bull run in itself. It was absolutely massive. Went all the way up to 13,794. Previous highs were just under 20,000, 19,745 on this chart. So even if we had a relief bounce, that was actually the 618 of the previous high, even if we had that, so 618 of the previous high, and the chances are it's not looking like we're going to get that now. 618 of the previous high, it's coinciding with this top here on the monthly. So at some point during the cycle, we potentially are going to come back and test this 618 and potentially have a little mini cycle in its own right, or some kind of a blow off top, some kind of a rejection from this 618 at some point. And then don't forget, we can't stay at these levels forever. It's likely that we're going to range and we're going to go see lower levels. It's likely that you're going to have some kind of a BAM at some point. And then obviously we've got to have a slow grinder. And don't officially make a new crypto bull run until we've broken this previous cycle and started moving to the upside. So we've got a couple of years yet before potentially we could reach the top of a new cycle. And we know that the halving's at here. You know, the halving's going to be about here in accordance with the current block cycle. So you got to expect choppiness. You can't expect a new bull run anytime soon. And at the end of the day, the markets will do whatever they want. If they wanted a new bull run anytime soon, they could have a new bull run anytime soon, but it doesn't look like there's liquidity in the macro for it to happen. First and foremost, there's things going on in the world that's not great at the moment. There's people that are becoming more unemployed. So these have got to play out. You've got to go through, in my opinion, a recession at some point before they start stimulating the economy, possibly the presidential election, and then break in the new cycle after there's more liquidity into the market. So you've got to think of it in the long term. These can be harmful because this range here.
When people see these charts, they will think that you think that the price will go to 12K at one point. Yeah.
I mean, it could go to 12K.
But I think that there is a possibility, as in the previous bull market, we had a top, then decreased to 40K, then another local double top pretty much.
Yeah.
I think that there is possibility that we have bottom run to 40K and then another double bottom, you know?
Yeah.
I don't think that it's impossible to happen.
No, I don't either. I think it's quite likely because you always see this happening as well. And this is designed to wreck the market. You always see you're making a base, pothole, bam. That's what I just spoke about earlier. And you see it time and time again. You're making a base, pothole before the cycles move again. And you can go back to other cycles as well. And it's the same with other cycles. They wipe the market out at some point. So you're making a base, and then bam, wrecks everyone, market moves. So that's quite possible that that's going to happen at some point. And it's just at what level are we when it does happen, if it does happen, and follows the previous cycles. Because this doesn't look like it's happened, does it? This looks like the start of a cycle. You put in a new low down here, then you put in another new low down here, then you've continued a little bit of a relief, not even hit the 382. Haven't even hit the 382. Previous cycle hit the 618. Haven't even hit the 382 yet. And because we put in a new low here, what's to say that this is a base? Because it doesn't look like a base to me. So what's to say that we don't range between, say, this level here for some time, and then you get the pothole down to 12,000. That could potentially happen before we start seeing moves to the upside, and that could potentially wreck people on that side. So it's anyone's game. You can just monitor price action at the moment. At the moment, price action is telling us that we've had this big bearish candle. We tested the previous low. This is the weekly chart. tested the previous low, only managed to make a new high. And it's looking quite weak on the macro at the moment, but we'll have to see what Jerome Powell says tomorrow.
And people complain how now there's less opportunities than it was before, but like imagine if we had the scenarios, there's like 2 opportunities before the new bottom to 2x your money pretty much. If you would get ranging market like that.
Yeah.
So it's insane.
Yeah, because that's higher time frame, so you can't expect it to keep doing it for quite a while between the top of the range and the bottom of the range. And quite often on the top of the range, you get limited opportunities. So it is ranging, but you see it only hits it a couple of times at the top. So when you look at that over a period of weeks and months, it's all well and good saying you can buy there, but the first time you don't know it's a range until the second time. Second time, that's an opportunity. And then you quite possibly might get one, like say potentially 2 opportunities before the next bull run. So yeah, it is limited, but that's why DCAing at low levels is always a good strategy. For people that don't understand charts, for people don't understand price action, you don't want to be DCAing into a bear market. You want to wait for the relief to happen, some kind of a bottom to be made, and then you can start looking at accumulating at lower levels. I mean, I like to DCA at levels of strong support. And if it does go below that and starts hitting to the downside, when I do start accumulating, I like to be able to take advantage of it, which you can do. I mean, you know me from months ago. I wouldn't even buy altcoins months ago. I'm starting to dip my toe in the water with a small amount of my portfolio now, just prepared for the next one. And if it goes down, Jellicoe, 50%, I don't really care. It's kind of designed to a certain extent to be able to go down because it means that you're accumulating at lower levels. Otherwise, you're not adding capital. You're just taking profits to a certain extent, and you need to actually allocate your capital first. So I'm pretty much in stable coins at the moment and Bitcoin and a little bit of Ethereum, but I'm starting to dip my toe in altcoins now.
Yeah, one interesting concept that I heard from one guy that was supposed to be in a call today, like what he's doing, he's always, maybe you heard in the podcast, he's always like 70% in like BTC and altcoins and 30% into USDT. So pretty much when the price started increasing, obviously that 70% position starts getting bigger and he's scaling out. When the price is decreasing, like that position is getting smaller in comparison to USDC and USDT, and he's buying more assets. You know, this is something that gave me an idea for the algorithm that I'm making as well, you know, like, because the only difference is that I don't want to have like consistent distribution, like 70-30 or something like that. I think 70-30 is actually pretty good ratio, but you know, like, I want to find some balance between, you mentioned that you follow Benjamin Cohen a lot, and you know that he has like 5x, 4x, 3x, 2x, 1x, and then when he's selling, it's the opposite, 1x, 2x, 3x, 5x. So like you want to find some balance between these two, because like obviously like every model will have its disadvantages, you know, like that Benjamin Cohen model is great if he gets the right range, you know?
Yeah.
If he estimates that the bottom is at like 10K, he might keep the 5x position, which is like 35-40% of his portfolio, like not utilized at all, you know? So that's the biggest disadvantage in my opinion, you know? And like, if he she's always around. If he overestimates it, that he thinks that the low end is like 20K and the price decreased to 10K, he has like so much drawback at one moment, you know, and missed opportunity at buying even lower, you know. I think some model like that is really good, but I think, you know, it can be optimized slightly more. There is a possibility that he optimized it probably as well, right? He just haven't talked about it on his channel. So yeah,
quite. Yeah. No, I think AI is going to be able to do stuff like that soon. I probably can do now already.
Mm, yeah, but like what's the problem of AI in situations like this is like, how to say it, like I don't think that AI will be utilized in that way. The reason is because when you look into the trading, into the markets, like obviously there is correlation between gold, DXY, stocks, Bitcoin, but each market behaves differently,
Mm.
and like on different markets you have different amount of data. Obviously for Bitcoin you have the least amount of data, and for the crypto, and I think like that will be the biggest obstacle of utilizing AI, because with AI you the more data you have, the better model you can build, right?
Yeah, yeah,
I know that, for example, for ChatGPT there is some tool which developed like with 10% of the data which ChatGPT has, it developed a model which is almost the same. But like with trading, I think it's getting different. Even when you look into the chart of Bitcoin, you can see that we had deviation up in comparison to 200 daily moving average. Then we have a deviation down. So like I feel like the techniques that are like utilize more, the algorithms that are utilized more, the trading strategies that are utilized more, they are becoming more and more inefficient,
yeah,
and there are more and more players that are like extremely proficient, at trading and these things.
yeah, yeah, yeah.
You can see the cat in
I can see the
background.
cat now. Yeah,
Yeah.
yeah, yeah, yeah.
I don't know what are your thoughts about that. I don't think, like I think that there will be more quant engineers that will work. Actually, there is already more, but I think there will be even more quant engineers working on algos and these things.
Yeah. I don't
And
really know too much about it. I know I use ChatGPT and I use it for little bits and bobs, but I don't really know too much about the back end of it. So I think it'll be good. I think it's going to be a useful tool, but depends. It depends what data you put in. That's the problem, isn't it?
yeah, it's one of the things. Yeah, for example, I think now the markets are different than in previous bull run.
Mm.
Just with decreased volatility, you can see that they're obviously like algos buying and selling all the time. Like
Yeah,
I'm not sure if there is analytics where you can see the exact amount of buys and sells. Not just the based on size, but actually based on the number of buys and sells across all exchanges.
yeah,
But that would be interesting data to see, because I think now there's like more trades than ever, more positions. Even though the volume is smaller, like the overall amount of money traded, I think like there are so much more super small positions,
yeah,
like 100, 200, $500.
yeah. No, agree. I'm probably going to have to cut this one short today, Jellico.
Yeah, sure. It's no problem. Yeah.
Yeah,
So this is it for today, guys. See you in the next call. Bye.
it's been a pleasure as always, and thank you very much for having me. And I'll see you guys in the next one. Look forward to it.
Bye.